Hey guys, sorry for being a little bit late. I got caught up in the middle of something. I ran over here, so slightly out of breath. Let's take a look and see what happened. We were not expecting this to be a huge run-up day because of the all-time highs yesterday. So we'll see if we got capped out anywhere and pulled back. So it's SPY. SPY, that is a red bar. It's very hard to see. So let's look at the intraday view. Is this intraday? Yes. Okay, so very interesting. We did head up higher. We got capped out at 531 and a half, and then we pulled back, and then about 10:30 in the morning, we started to break down, and we stayed below the VWAP ever since and broke down hard in that last half hour. So it looks like everything that we were saying is finally coming to fruition. Now, we're not going to celebrate too much. Let me get a different microphone on. See if you guys hopefully.
Let me just make sure that you guys can hear me. Yeah, okay, I think we're good. So we did kind of cap out right here. We are a little bit lower than yesterday. So yesterday was, at least for closing purposes, an all-time high, but we did reach in terms of the high of the day, we did reach an all-time high today, but we pulled back from it. So this is starting to be more like behavior that we expect. So maybe something like this, where we had an all-time high, and the next day we actually still closed just barely above, but in our case, we closed a little bit down. So we're going to expect this to continue along that line and maybe come back to the EMA 8, which is probably around this purple line right here, 523.45 that we already had, or actually the previous all-time high. So we could bounce off of that. By the time we get there, this EMA 8 could have reached that point, but it could either be this or the EMA 8. If we're a little bit weaker, we'll pull back to the EMA 20, but that's kind of far. So we're not going to hold our breath or count on being able to pull back all the way to the EMA 20. For now, we're just going to expect that EMA 8 and topping out just like we expected. So let's see what happened in bonds. Bonds, same thing. We hit that top of that channel right there, and then we started to pull back, which is exactly what we expected. From last week, we had a TLT short that I liked. We probably put it on around here, so it did gap up yesterday. So we're probably still in the red on that, but chances are very good that we'll pull back all the way down here, and we did go 1% extrinsic value on that. So we have plenty of time for it to pull all the way back down and for it to make us some money. So we're not too concerned about that at all. So what does this mean? Can we expect something even further than the EMA 8? Maybe. If you're not trading singles and you're open to spreads, or you have a margin account and you can trade spreads, then actually what would be really good, it's something that I haven't really publicly talked about, but some of you have definitely seen me trade, and some of you know exactly what I'm talking about, is the risk-free trades on the SPX. Not something that we've done for a while, right? Probably about a year or so. Something that we were very excited about because it's something that can very easily and very quickly turn into a risk-free trade and you have free money. So if you know what I'm talking about, now is an excellent environment for the downside to take on a risk-free trade. Just make sure you cap yourself out in case it does pop back up. But right here, how long do you expect this to go back down to the EMA 8? Well, those risk-free trades are 5 to 7 days to expiration. So between 3 and 5 trade dates. So that can make you quite a bit of money at a potentially risk-free rate for a couple of days. So just keep that in mind if you know what I'm talking about. The QQQ, let's see what happened in QQQ. We're down 0.21%. So it looks like we're down even more than the SPY, or same as the SPY. Dow Jones, down only 0.02%. What that means is that the blue chips led today. Is the exact opposite of, not the exact opposite of yesterday. Yesterday, we saw a lot of defensive sectors like healthcare leading as well, but it was especially the gold and the silver, which was one of the clues we used to show us that that we're not going to go straight up in the markets, right? That we're probably going to pull back pretty soon. So let's see what happened in gold. Gold did pull back a little bit, not much, 0.38%. So in the context of the SPY, if we came out of gold and we came out of the stock market, where did that money go to? So we'll check our sectors in just a minute. Bonds, we already checked. That came off as well. Let's look at our VIX. VIX is flat. And then our dollar. Let's see what happened to our dollar. It popped up, but it was already kind of up in the morning. So relative to the morning, I'm not sure where we are. DXY. Relative to where we're up 0.22%. Okay, so maybe a little bit of money went into currencies or things that would benefit from a strong dollar. Benefiting from a strong dollar would be companies that do a lot of exports. So, sorry, not a lot of exports, a lot of imports. Companies that buy a lot of materials from overseas. They're the ones who would benefit from a strong dollar. So let's take a look. Let's see how retailers did. Not that good. How about manufacturers, industrials? Industrials would be the ones buying things from overseas. So XLI. Oh, not that great either. XLB. Not that great either. So it's looking like more of a broad-based, so maybe just cash. Maybe people just went out into cash. So we're going into our sectors here. Let's see what we did. XLP led. So definitely a defensive sector led. Financials, which is really interesting. I'm actually really interested in financials in this environment. Why? Because if interest rates go up, financials benefit because they get to charge higher interest rates. But if interest rates go down, they're not affected that much. Maybe they charge less for interest rates, but the money stays within the banking system. And so it actually doesn't get hurt too much. It's like a uneven trade. They benefit a lot to one way, and then they don't get hurt too badly in the other direction. So financials are definitely something that I want to start looking at, and they'll benefit from a stronger dollar as well. And then let's see here, communications, that's interesting. So we have P and C and V right next to each other. And then real estate, which is interest rate sensitive. So maybe still a little bit of exuberance for the potential, which I don't see it for rate cuts. But really the only ones that are up are aerospace, defense. There's still conflict in this world that is unresolved. People unfortunately killing each other. And then there's consumer staples, up by far the most. And then we've got an okay amount in the financials, and then just barely up in the Dow Jones. So we're definitely seeing some defensive moves in the market. Let's take a look at XLP. Yeah, that went up for sure. That gapped up. That gapped up and traded up. So it had a muted reaction yesterday. It did go up, but not by much. And then today it gapped up, sort of like the S&P gapped up yesterday and went up. So there's just like a phase shift in staples. So it looks like yesterday maybe, well, there wasn't a lot of risk actually. Well, XLY, the interest rate related sectors were up yesterday, and then XLP caught up. So that means we've got at least some defensive positioning going on in this market. And the net downward movement is money, obviously. So the S&P is down 0.21, XLP is up 1.5. That means this absorbed a lot of the money from sectors, but obviously not all the money from all the other sectors, because we're net down in the S&P. So a little bit of money looks like went into cash as well. But definitely it's interesting that we're going into staples, the very defensive move, and then ITA up a normal amount, nothing to be excited about. So let's look at XLF, see if we might potentially want to go in there. Okay, not yet. We'd wait for a pullback before we go into the financial sector. So let's look at our CPC. CPC is currently at 0.88, so neutral, nothing to conclude. But it's interesting that we're below 1, which means there's still enthusiasm for the upside, even though we're starting to pull off. So at some point, this is going to whip over to 1.0 and maybe above 1.0. When I see 1.0, a neutral amount, then I will look for potentially a pause or the end of this downward movement, this baby downward movement. We're not expecting a huge downward movement. We're not expecting a break of this new uptrend that we started. We're just expecting a baby pullback to maybe to the EMA 8, maybe to the EMA 20, but that's a little bit more of a stretch. When I see the put to call ratio even, then I'll know that we're balanced in this market. And then that is a chance for us to turn back around. Or if we swing to the other side above 1.0 on the CPC, then we could turn around from there as well. So we'll just keep an eye on that, and we'll keep an eye on our EMA 8 and this previous all-time high level right here. Okay, so we should now pay attention because tomorrow, nothing happening tomorrow, I think. Yeah, just a couple of Fed speakers. So, and they're probably going to say the same thing that everyone else said. So there's nothing going to be too exciting over there. So all that's left is anything that might be reporting earnings tonight or today or tomorrow morning. So let's take a look today after market. And then I don't know what, and worked, never heard of that. So, oh, that's only 32 million. Never mind. So 25 billion. Take-Two Interactive, that is a tech stock, gaming stock. And then we've got Copart. Copart will be more of a industrial material. And we have AMAT. So the AMAT will be very, very important. So let's take a look at Copart and AMAT and maybe Take-Two, GTO. GTO. Okay, so did not do well, doesn't look like. And then we have Copart. Copart, we don't have any data yet. They haven't quite released just yet. And then we had AMAT, chip stock, all over the place, all over the up, then down, but overall, at least so far, down. So this is still developing. For now, it looks like it's going to be down, but we'll have to check back again tomorrow morning. So far, we've got AMAT, major semiconductors, which is one of the hot sectors right now that a lot of people are going to be paying attention to. We got that so far. Looks like it's down pretty significantly. And then we had Copart that didn't release. So Take-Two, I'm not going to read into that one. But at least AMAT is going to be a downward force. Not a huge one, but at least it's a force down in the market. So we can probably safely expect that this will continue tomorrow, maybe to the EMA 8, because that could have caught up to this horizontal line right here, the previous all-time high by tomorrow. But at the very least, we can expect maybe a down day, not hugely down, just basically undoing that CPI move, or at least from the trading session, not necessarily the gap, but from the trading session, we might undo that tomorrow. That's what is looking most likely at the moment. The picture could look very different tomorrow morning because we have Europe trading and Asia trading during that time period. But as of right now, our expectation can probably safely be that we're going to pull back a little bit more overnight or during tomorrow's session, and then we'll see what the weekend has for us. So that's about it. If you are in a neutral position, like I suggested this morning, like either you have no positions and you're just in cash, or we put some cash to work, you have a long and a short, then you're sitting pretty. I made a mistake where one of the puts was supposed to be a call, and so we doubled up on calls, so we're exposed right now, and we'll have to correct that in the morning. But otherwise, be neutral, stay neutral until we have a high probability, high conviction environment. So that's going to be it for today. I will see you tomorrow morning.